Hey everybody, Boris, let's speak Forex. Welcome to the crosses section for September 9, September 13, 2019. The story in the crosses this week is really going to be sort of the strength of the Canadian dollar and the potential here for euro weakness all across the board. So two ideas I had for essentially the euro weakness is euro CAD to the short side, which is a combination of really the strongest and the weakest from last week, and the idea that ECB policy initiative is going to push the euro much lower, with obviously CAD staying stationary, giving us a lot of benefit here. Potential here for 144 on euro CAD to the downside. Euro pound a little bit more problematic, and actually I just need to correct this a little bit here, in a sense that a lot of the good news on the pound has already been factored in, but there's still potential here for more downside, I think, down to 89 at least. So we're watching that level very, very carefully. It's really a combination both of maybe final positive thrust from the political resolution beginning of the week in cable, followed by, of course, the, let's say, much more dovish posture out of ECB coming out on Thursday. And then the final trade, which we'll take a look at the charts, is really completely a technical trade here. What's fascinating to me on this one that I could really caught my eye is just how much resistance there was at the 107s in the Aussie Kiwi at this point. Obviously, Aussie Kiwi was a huge buy for the last week and a half, and the fact that we've just hit that wall and are now starting to reverse suggests a little bit of mean reversion in the trade. It's really intra-cross trade. Trade is initiated much more on technical grounds than anything else, since we don't have any news. So let's take a look at the charts from the beginning, and you'll see what I mean. So one of the reasons why I really like EuroCAD here is you can see fresh multi-month lows. Usually that kind of momentum move tends to have at least some extension, and at very minimum, the move down to 144. So if we go to the weeklies, let's just take a look at the weeklies and give ourselves a lot more room here. You see that it's really the this choppiness over here, the 145, and the low here is the 144.40. That's the area which presents the most interesting opportunity. And over here, by the way, this takes us back on the weeklies to the Macron gap. This was the euro gapping open on the Macron win, which is now very, very tempting to be fully refilled. It got filled once, and this is the secondary time we could possibly fill it again. The one technical caveat here is if the euro does, if the ECB does not provide any kind of a significant dovish guidance, there's potential here for a little bit of a short covering. But I think the fact that this is the third time we're testing the lows, and the fundamental structure here is so heavily skewed against the euro or pro CAD that on a longer term basis, this is going to give way, and we have a chance here now to break the fresh lows, possibly all the way down to 42s. So you may experience a little bit of turbulence against you on some short covering flows, but I think honestly on a kind of a longer term thematic macro trade basis, you have to give yourself all the way to 48 to be proven wrong, which is, I understand, quite 300 points of trade. But on the other hand, the potential here to move to 140 is quite significant. So I like this both on a short-term momentum basis, but also on a much longer thematic basis, because I think we've reached a point here on the move where we could crash. And if you look at this, by the way, on a longer term, look at this, the weekly technical basis, very, very clear starting breakdown of this massive top here, right? It's kind of like even the head and shoulders kind of broke here, and the move, this is the final area of support here until really the 138s, if you look at it carefully. So I like this trade a lot on a longer term basis, even if there is some short term turbulence that you may have to experience just on short covering basis. Let's go back to the dailies. Take a look at the euro pound. Here's the euro pound. So this is the dailies euro pound. Euro pound, we tested the 89s, had a big spike against 93, so it's sort of a perfect completion of this U cycle back down to 89s. That's the support area that looks feasible for us. Again, possibly a little bit of short covering up to the 90s, maybe even 90.50, but overall, this is really a massive topping formation here. And I do think that the trend, this is as much a negative euro trade as any kind of a positive pound trade. Certainly the trade has scope here to go towards 89s. That if that gets broken, then it really opens up the full unwind to 88 as we go. So after this massive, how many? This was like almost 3 months of uninterrupted moves in euro pound. What happens is you get the negative reversal of that, the kind of uninterrupted downward move as profit taking takes shape. So I'd be watching that pretty carefully. I still think there's potential here for 89.50 as we go. And finally, here's the let me get to Aussie Kiwi. Here's the interesting trade. This is the dailies, and really what you see is just how much of a cement ceiling this 107 level has been for Aussie Kiwi. Now remember, I've been talking about this forever with you guys that Aussie Kiwi thematically is a negative trade. Like it has been essentially a negative trend trade for a couple of years, essentially on the assumption that the China gift is going to die for Australia. The China story continues to slow down. Eventually, that's going to create more and more need for easing on the RBA's part, and just basically lower and lower growth in Australia, simply because Australia depends on hard commodities, whereas New Zealand gets a lot of its revenue from recyclable commodities like soft goods like lamb and foodstuffs and everything else, for which demand is much more inelastic. So there isn't, it's not a sort of a single demand like it is for iron ore. It's much more continuous demand. And that large thematic story seems to be playing itself out, albeit with some very, very sharp corrective moves here. So this was the corrective move here from 103s to 107s, another corrective move here from 103s to 107s, but we're failing. And I think this is the interesting point here. If we're failing here, there's potential here for us to certainly take the 106s, and if that comes in, that really seals the range at 107s, suggests maybe we can trade back down as you get the realignment of moves here. This last burst here was really on the surprise RBNZ cut of 50, but I think now the market has sort of absorbed it. The idea here is that RBNZ is not going to be moving much for a while, but RBA may have to catch up to it, and that will take the trade back down towards the 105s. So overall, I like the fact that we had a big reversal here. There's a very, very clear stop at 107.50. The trade here for now seems to be to the downside towards the 106s at the very minimum. That's how the crosses shape up. I wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.